Hey tech lovers, welcome to the Wednesday edition of Tech Stocks Daily. Today, we've got a jam-packed lineup just for you. Google's battling a potential breakup by the DOJ while rolling out the new Pixel 9 series amidst a few demo hiccups. Then, it's legal drama galore as DXC Technology faces class action lawsuits for alleged securities fraud. Next, dive into a sizzling new partnership between Microsoft and Jamf to rock your workplace Apple devices. And finally, CrowdStrike's roller coaster month after a disastrous software update debacle. Buckle up and stay tuned. It's going to be an insightful ride. Let's dive into today's tech news, focusing on why Google is making headlines and shaking up the stock market. Oh boy, where do we start? Alphabet Inc., the parent company of Google, has been facing rough seas ever since news broke about potential antitrust repercussions. The U.S. Department of Justice is apparently considering the nuclear option, a breakup of Google. This stems from a U.S. district court ruling that found Google guilty of monopolistic practices to maintain its search engine dominance. If this breakup happens, it would mark the first such action since the DOJ's unsuccessful bid against Microsoft way back in the day. Stockholders are naturally jittery. Google shares took a nosedive, dropping 3.13% to around $159.02. Not surprising, given that the DOJ's move could significantly change the playing field for Google and the tech industry as a whole. Now on to T-Mobile, who decided this is the perfect time to make some moves. While Google grapples with these legal challenges, T-Mobile is out there hustling pixels. They've introduced the new Google Pixel 9 series and Pixel Watch 3 with some tasty offers. Imagine getting $200 off the new Pixel 9 Pro XL without needing a trade-in or new line. They're even throwing in double the storage for pre-orders. T-Mobile is playing chess while everyone else is playing checkers. Oh, and speaking of the Pixel 9 series, let's talk features. Google's new babies, Pixel 9, Pixel 9 Pro, Pixel 9 Pro XL, and Pixel 9 Pro Fold, are loaded with advanced AI capabilities. We're talking about the Reimagine in Magic Editor, Pixel Screenshots, and the Gemini Nano Multimodal AI. But wait, it wasn't all smooth sailing. During a live demo at the Made by Google event, Google's latest AI assistant Gemini had not one, but two glitches. It took 3 attempts to get it working, raising eyebrows about the tech's reliability. Despite the DOJ's strong-arm play, not everyone is sweating bullets. Wedbush analyst Dan Ives thinks a breakup is highly unlikely. Ives predicts we might see business model tweaks rather than a full-on dismantling. The legal battles, he says, could drag on for years. Google is already planning to appeal the ruling. But wait, there's more. Google is expanding its hardware offerings with the Pixel 9 series now available for pre-order in India. Alongside some solid smartphones, you've also got new Pixel Buds Pro at sky-high discounts with pre-orders. Google is aiming to keep its foothold in the market amid the legal wrangling. To top it off, even amidst the storm, Google managed some positive moves. The Pixel 9, Pixel 9 Pro XL, Pixel Watch 3, and new Pixel Buds all made their showy debut. And Google is still gunning for that smartphone market share with features like satellite SOS and new AI-powered functionalities. Phew, what a whirlwind day for Google. Whether it's surviving court drama, tripping up during live demos, or dazzling us with new tech toys, they sure know how to stay in the news. Stay tuned to see how the legal saga unfolds and what it means for both Google and the tech behemoths lining up behind it. Oh man, if you're an investor in DXC Technology, you might want to sit down for this one. Today, DXC Technology Company made quite the buzz on the tech news front, and not in the new product launch kind of way. Nope, it's all about legal drama. 3 prominent law firms have announced class action lawsuits against them for alleged securities fraud. Hold on to your keyboards, because we've got some law firms vying for your attention. Levi and Korsinski, the Schall law firm, and Barrick, Rodos, and Bassin. All 3 received the invite to this courtroom dance-off, and they're calling on all DXC investors who bought in between May 26, 2021 and May 16, 2024. If you've been along for this bumpy ride and felt your wallet feeling lighter, you might have some skin in this game. So, what's got DXC in such hot water? Let's break it down. The lawsuits claim that DXC was not quite the transparent tech titan it portrayed itself to be. Here's the gist. 1. Transformation Tango. DXC had this whole narrative about an ongoing transformation journey. They were all about integrating previously acquired companies and business systems. Synergy and all that jazz. Except the lawsuits allege that this dance of integration was more 2 left feet than smooth foxtrot. It wasn't exactly progressing as per their public performance. Number 2. Cost-cutting illusions. We all love some cost efficiency, right? Well, DXC talked a lot about reducing restructuring and integration costs. But here's the plot twist. According to these lawsuits, they weren't actually cutting those costs, they were just deferring them. It's like putting off that dentist appointment. The problem doesn't go away, it just gets worse. 3. Public persona versus private tempest. Out there in the big bad world, DXC was flaunting their success in this integration strategy, stressing they're cutting down costs. But behind the scenes, the lawsuits claim that high-ups knew this wasn't quite the reality. Their version of cost management and integration success might have been more fantasy than fact. And how did investors realize this wasn't the happily ever after they signed up for? Some bracing disclosures popped up over time, a bit like plot twists in a bad drama. On August 3, 2022, for instance, DXC's stock nosedived 17% after news came out. December 2022 brought along a sudden CEO and chairman exit, pushing the stock down another 12%. And the final hammer fell on May 16, 2024, when the new CEO dropped the bombshell that all these integration talks didn't really lay any groundwork for growth. Stock tumbled 17% more on this disclosure. Right now, affected investors have until October 1st, 2024, to toss their hats in the ring to be considered as lead plaintiffs. Should you be part of this class action? Remember, each law firm insists there's no out-of-pocket cost to join, and you don't have to be the lead plaintiff to benefit from any potential remedies. Looks like DXC Technology's been having a bit of a melodrama moment, and these lawsuits seem set to keep the suspense alive for a while. Keep those browser tabs refreshed for more. What's rocking the tech world today? Well, Microsoft and Jamf are cozying up in a major way. Jamf, the big kahuna in managing and securing Apple devices in the workplace, just announced a sizzling new 5-year partnership with Microsoft. They're hopping on the Microsoft ISV partner program train and planning a huge expansion of their collaboration to turbocharge growth with Microsoft Cloud and AI-powered solutions. How's that for a power couple move? The crux of the deal? Jamf's solutions will now be hosted on Microsoft Azure, which means a champagne-popping moment for businesses that use both Microsoft and Apple products. This collab will roll out in late 2024, making Jamf Pro, Jamf's flagship Apple management tool, available on Azure Marketplace. The implications? Organizations will enjoy a seamless procurement experience, easily leveraging their Azure spend to snag Jamf's top-tier services. Let's dive into why this is exciting. Jamf has been optimizing Apple device management with flexibility and robust security. Combining this with Azure's scalable and secure environment means customers will get the best of both worlds. Picture a tech ecosystem where Apple and Microsoft products work hand-in-hand like a well-trained dance duo. Customers will be able to integrate unified endpoint management and cybersecurity measures effortlessly within their existing Microsoft infrastructure. It's a digital PB&J, tasting perfect together. In case you're wondering, all this is rooted in a solid 7-year courtship between Jamf and Microsoft. Since 2017, they have been BFFs, aiming to marry Apple device support with Microsoft's platform services. Remember these milestones. Jamf was the first to offer conditional access for macOS and later joined the Microsoft Intelligent Security Association in 2023. It's been like a Hollywood rom-com montage showing how Jamf kept deepening its connections with Microsoft tools like Entra ID, Sentinel, Defender, and even Power BI. Priscilla Laham, VP Global Partner Solutions Americas at Microsoft, summed it up nicely. She noted that this partnership isn't about just saying "I do" on paper. It's about empowering organizations globally to stay ahead of cyber threats, managing and protecting their end users' data with joint capabilities forged in the cloud. It's less about tech clashing and more about convergence for a smoother, smarter workplace experience. In short, this agreement signals a major milestone for both companies. For Microsoft, getting Jamf on board means an enhanced and more secure ecosystem for a plethora of organizational needs. For Jamf, leveraging Microsoft's Azure cloud doesn't just expand their footprint, it revolutionizes how they deliver endpoint management and security solutions across the Apple sphere. Long story short, brace yourselves for a whirlwind romance between Apple endpoints and Microsoft muscles. This partnership is hinting at more strategic integrations, knack for innovation, and oh yes, some very happy enterprise customers around the globe. So stay tuned, because this plot twist in the world of tech collaboration is only the beginning. Hey tech enthusiasts, let's dive into today's hot topic, CrowdStrike in the spotlight, and not for the best reasons. Fancy cybersecurity or stock market moves? Well, we've got both on this roller coaster ride. So what's cooking with CrowdStrike? First up, a dramatic feather ruffling in the form of a class action lawsuit. Levi & Korsinski LLP is notifying investors that there's a ticking clock on becoming a lead plaintiff in a securities fraud case against CrowdStrike. The law firm is pushing for aggrieved shareholders who suffered losses between November 29, 2023 and July 29, 2024 to come forward by September 30, 2024. The allegations boil down to claims that CrowdStrike misled investors about their software update controls and the risks these posed. Essentially, they're accused of rolling out updates to their Falcon platform without proper testing, which, you guessed it, blew up like a pent-up volcano, causing major system outages for many of their clients. Speaking of which, let's roll into the next bit of news that has Wall Street buzzing. Enter stage left, the epic nosedive of CrowdStrike stock by a whopping 34% in just 1 month. This wasn't any ordinary roller coaster drop. This plunge was hugely influenced by that faulty update in July that I just mentioned. Basically, that shoddily tested update wreaked havoc on 8.5 million Windows systems globally. We're talking chaos in banks, airports, hospitals, and even pesky government agencies. Yikes! As if that wasn't enough to unsettle investors, the broader blow was due to ongoing macroeconomic concerns and market jitters about Fed interest rate policies and recession fears. Yeah, 2024 hasn't been easy on anyone's nerves. CEO George Kurtz has confirmed that the debacle has been fixed. But has it? That's the question on everyone's lips. Yes, the brand's image has taken quite the hit. Clients have started giving side-eye to CrowdStrike's once-envied Falcon platform, making them more susceptible to competitors like Palo Alto Networks and Fortinet swooping in. Opportunities for these industry rivals are ripening like summer peaches. Now here's the twist. Even with its stock taking a beatdown, CrowdStrike's valuation remains sky high. We're talking a forward 12-month PE ratio of 56.95x compared to the internet software industry's average of just 31.32x. So there's a heaping spoonful of skepticism among investors who are wary even at the dipped prices. Yet, hold your horses before you panic sell. Despite these setbacks, CrowdStrike still has promising long-term prospects. The cybersecurity field, driven by rising cyber threats, continues to swell. CrowdStrike's innovative push with the Falcon platform and key partnerships could still see it soar higher in the future. All right, that's enough drama for one day. Now it's your turn. What are your thoughts on CrowdStrike's roller coaster month? Buying the dip or waiting for calmer seas? Are you an investor or maybe a tech professional dealing with Falcon firsthand? Drop your comments below and let's chat about this cybersecurity saga. Looking forward to hearing what you think. All right, folks, let's zero in on Google today. Given the news, if I were holding Google stock, I'd be inclined to hold it for now. Here's why. First off, let's address the elephant in the room: antitrust noise. Yes, the US Department of Justice is talking breakup, and that's certainly daunting. Google's court ruling over monopolistic practices could lead to years of legal battles. However, considering that experts like Wedbush analyst Dan Ives think a breakup is highly unlikely, we're more likely looking at changes in business practices rather than an outright dismantling of the company. Timelines for these legal wranglings could stretch for years, giving Google time to adapt and respond. Second, let's not forget Google's recent product rollout with the Pixel 9 series and Pixel Watch 3. Sure, they encountered some hiccups with AI during the demo. Talk about stage fright. But the new features like the Gemini Nano multimodal AI and Reimagine in Magic Editor show Google's commitment to pushing the envelope. Plus, their smart strategic moves, like T-Mobile's attractive deals on Pixel devices, are likely to keep their fanbase engaged. Financially speaking, a 3.13% dip is not trivial, but isn't a sky-is-falling scenario either. Given Google's history of innovation and market adaptation, it's reasonable to expect them to weather this storm, especially as they push their hardware into new markets like India. In essence, while the stock may be rocky in the short term due to legal uncertainties, Google's proven resilience and continuous innovation make it a worthy hold. Remember, we're talking about a tech titan that has faced and prevailed over regulatory challenges in the past. But hey, don't just take my word for it. Whether you're thinking of holding, buying, or bailing, always conduct your own thorough research. Look at your financial goals, risk tolerance, and most importantly, stay informed. So what's your take on Google? Holding, buying, or just too spooked to stick around? Drop your thoughts in the comments. So there you have it. Today's tech news has us all buzzing. Google bathing in legal turmoil, but still charging ahead with shiny new gadgets. DXC Technology caught up in some serious lawsuit drama about alleged securities fraud. Microsoft and Jamf getting cozy to better manage your Apple devices at work. And CrowdStrike's epic tumble after a software update mishap. Volatility's the name of the game, but you know we love to keep you updated on every twist and turn. If you enjoyed this rundown, don't forget to like, subscribe, and share this video with your fellow tech enthusiasts. And remember, we've got another action-packed update coming your way tomorrow, so stay tuned and keep those notifications on.